Good morning. Welcome to Trading Hour. It's a Thursday morning. I'm Reema Tendulkar. With me, Surbhi Upadhyay, and markets are cruising along. The Nifty and the Sensex up close to about 0.3%. The Nifty's got a gain of 70 points, 22,675. Sensex is up close to about 250 points. Banks are flat. The weakness in Kotak Mahindra Bank is offset by gains in HDFC Bank. So that's batting for the banks. HDFC Bank is up more than 1%. The advanced decline ratio, Surbhi, is holding up in the green. Mid-cap index too has got a shade of green.
Hi. Well, I think beyond the indices, today the market has lots of individual stocks to track. So it's all about granular news flow, earnings and corporate action.
Auto sales, right? The Nifty auto index is up 1%.
So, yeah, absolutely. So if you talk about the movers and shakers, on the upside, you have the oil marketing pack as a pack. That's, of course, doing very well because of the fall in oil prices overnight. So IOC, BPCL, HPCL, they're all up and about. Some of those stocks are coming up on your screen. And then auto sales, largely speaking, positive, except a couple of disappointments. So right now you've got a Bajaj Auto, which came out with a very good, solid 17% up move in terms of April sales. That stock's up and about. Tata Motors doing well. Maruti was the one that was sluggish, and that's because of the fact that they've fallen short of expectations in April. But even that stock's recovered from the lows of the morning, so it's not bad whatsoever. Then there are lots of other, as I said, news-based movers and shakers, and we'll talk about them. Kotak Mahindra Bank, for instance, it's still reeling under pressure, down about 3.5–4%. That's one. If you talk about the positive result reactions, then IndiaMart has to really top that list. 7% up on IndiaMart, by the way, right now. Chola Finance, Chola Investment, these stocks are up in about 4–5% on both of these group companies. And, of course, there's Federal Bank. Federal Bank, by the way, reports numbers as well. But, beyond numbers, everybody wants to know if there is a management change right at the top once Mr. KVS Manian quit Kotak Mahindra Bank. So let's see. We'll talk about this as we go forward. But let's kick it off then with, of course, some of the major newsmakers and the big news points of the day. As I was saying, Kotak and Federal really are the biggest talking points today, and Kotak continues to be the top loser on the Nifty after KVS Manian stepped down as the bank's joint MD. Federal Bank, of course, is approaching that press conference. There's a press conference at 2 o'clock on earnings and other important developments. So that piece is something that the market is really watching out for. Abhishek is joining in with more details. Abhishek, I guess this also came as a bit of a surprise. The sudden resignation that came in from Mr. Manian.
Well, Mr. KVS Manian has submitted his resignation, and the board has taken it with immediate effect, despite the fact him asking for the tenure of how long should he be working. Manian ceases to be a director and key managerial personnel at Kotak Mahindra Bank. In his letter, he mentioned that he intends to move ahead. He also wrote that it is time for next chapter, and he's moving ahead with belief and optimism that he can yet again find a fulfilling assignment for himself. On 15th of February 2024, CNBC-TV18 had reported Federal Bank has shortlisted Mr. KVS Manian as the CEO candidate, and they have also taken two internal candidates into for their scrutiny, or let's say names to be given to RBI. We had written to them. They said that this process is overseen by the board in accordance with their succession plan, is what the Federal Bank management did tell us in Feb of 2024. And if you take a look today, they are holding a board meeting to consider their Q4 FY24 results. Along with that, they'll also discuss future plans and key initiatives in the board meet. So let's wait and watch whether or not MD and CEO's candidate's name will be revealed over there. Back to you.
Thank you very much for that. Moving on, shares of MOIL are gaining in trade after the company hiked manganese ore prices. Nigel joins in with the details. Nigel.
Well, that's right. If you look at it in the last 1 month or so, MOIL has been moving up. And the street was bracing for this price increase that will come about. Well, it's building on gains even in today's trading session. So to run you through the news piece first that they have put on the exchanges, well, they've said that they've increased prices by around 25 to around 40%. Depending on the variant that you're talking about and depending on the manganese content in the ore. So that's why, in fact, we have seen that the stock is up and about. So those rates as well should come up for you on the screen. What's the key reason for this price increase? Well, there's a mine in Australia that's faced some weather issues. And because of that, we have seen that prices globally have moved up. So MOIL has gone ahead and played a bit of a catch-up with the global pricing. And that's why they have pushed this 25 to around 40%. The management had joined us earlier in the past month, and they were guiding for volume growth as well. So volume growth coupled with this tailwind of pricing, that's what's going to help them going ahead. And that explains why the stock is up and about. After seeing a 30% rally in the last 1 month or so, well, it's up another 8% odd. We here at CNBC-TV18 on the 24th of April had alerted our viewers that there's a possibility that the price hike could come about. The stock was roughly around 370 rupees at that point of time. And that's precisely what's happened. So Moil taking off.
Okay, all right, Nigel, thanks very much. Another very, very good session for Moil. Well, those are some of the stocks in focus. Before we take our first break on the show, let's actually get you a mega News 18 exclusive. Network 18's Group Editor-in-Chief Rahul Joshi sat down with Union Home Minister Amit Shah to discuss everything on the agenda this electoral season. Minister Shah says India has become a favorite destination for manufacturing in the world due to the PLI schemes, and added that 130 crore Indians are moving ahead with confidence that the country can become number one in the world. Listen in to some excerpts.
पहले शुरुआत करते हैं अमित जी मुद्दों पर। कौन से ऐसे मुद्दे हैं जिनको लेकर भारतीय जनता पार्टी आज तीसरी बार लोगों के बीच जा रही है? किन उपलब्धियों को आप संक्षेप में बताएं कि किन उपलब्धियों को लेकर आप जनता के बीच उतर रहे हैं?
देश की इकोनॉमी सब दृष्टि से चरमराई हुई थी। पॉलिसी बनती ही नहीं थी। उत्पादन की गतिविधियां बड़ी मंद पड़ गई थी। निर्यात ओंधे मुंह गिर रहा था। देश की सारी सार्वजनिक बैंकों की बैलेंस शीट भी न बन पाए अगर सच्ची बनाने जाए, इस प्रकार की स्थिति थी। महंगाई आसमान को छू रही थी और कुल मिलाकर बजट के 16 के 16 पैरामीटर्स नेगेटिव दिखाई पड़ते थे। 10 ही साल में मोदी जी ने ये परिदृश्य को पूर्णतया बदला है। शेयर बाजार आज आसमान को छू रहा है। एफआईआई के सेलिंग के बाद भी भारतीय म्यूचुअल फंडों ने बाजार को ताकत दी है। पीएलआई स्कीम के कारण और एक मजबूत इकोसिस्टम के कारण भारत फेवरेट डेस्टिनेशन मैन्युफैक्चरिंग के लिए पूरी दुनिया में बना है। जी। हमारे बच्चे स्टार्टअप हर रोज रजिस्टर कर रहे हैं। हमारी कंपनियां हर रोज पेटेंट रजिस्टर्ड कर रही हैं। ढेर सारे स्वरोजगार के अवसर पैदा हुए हैं। सभी की सभी बैंकों की बैलेंस शीट आज बहुत अच्छी बन चुकी है। इंडस्ट्रियल ग्रोथ के जितने भी पैरामीटर्स हैं वो 25 साल के टॉप मोस्ट मार्किंग पर हैं। एक्सपोर्ट रिकॉर्ड तोड़कर आगे ही बढ़ता जा रहा है। इसी प्रकार से फ्यूचर में जो कुछ क्षेत्र आने वाले 25 सालों तक दुनिया भर की इकोनॉमी को ड्राइव करने वाले हैं, वो सभी क्षेत्रों में भारत आज पायनियर बन चुका है। जैसे ग्रीन हाइड्रोजन मैन्युफैक्चरिंग जी, थोड़े लेट है मगर सेमीकंडक्टर जी, इलेक्ट्रिकल मोटर व्हीकल जी, बैटरी का उत्पादन, अंतरिक्ष का क्षेत्र, लेट होने के बावजूद मैं फिर से कहना चाहूंगा डिफेंस भी। इस प्रकार के कई क्षेत्रों के अंदर जो आने वाले 25 साल तक दुनिया की इकोनॉमी की दिशा और दशा तय करने वाले हैं, वहां आज भारत एक मजबूत फाउंडेशन डाल चुका है और ये फाउंडेशन पर एक बड़ी इमारत होनी है। तो इकोनॉमी भी सुधरी है, सुरक्षित भी हुआ है। देश 11वें नंबर का अर्थतंत्र था, आज 5वें नंबर का अर्थतंत्र बना है। गांव हो या शहर, जंगल हो या रेगिस्तान, सागर किनारा हो या शहर हो, हर जगह इंफ्रास्ट्रक्चर के डेवलपमेंट के काम हो रहे हैं। आज 10 लाख करोड़ का इंफ्रास्ट्रक्चर का खर्चा भारत के बजट में आम बात बन चुका है। जीएसटी कलेक्शन और डायरेक्ट टैक्स कलेक्शन अपने सारे रिकॉर्ड स्वयं ही तोड़ते जा रहे हैं। देश के अंदर सीमाओं को चौक चौबंद करने का काम भी नरेंद्र मोदी जी ने बहुत अच्छी तरीके से किया है। जनता में भारत का भविष्य उज्जवल है, इस प्रकार के विश्वास का निर्माण करने की नेतृत्व की जो जिम्मेदारी है, नरेंद्र मोदी जी को इसमें बहुत अच्छे तरीके से सफलता मिली है जी। आज पूरे 130 करोड़ लोग हम विश्व में सर्वप्रथम बन सकते हैं, ये आत्मविश्वास के साथ आगे बढ़ रहे हैं।
Welcome back. Well, we're looking at a lot of stocks that are moving on news or earnings today. Netweb is one of them. It's reacting rather well to the numbers. Let's see. Last I checked, it was about 5-6%. Yeah, 5% is the circuit on Netweb. This after a strong Q4 print. Rima, tell us what has worked for Netweb in the fourth quarter.
Well, the numbers are strong all around, right? It's a top-down beat, very good numbers. And this is a stock which has done very well. Today, it's locked in an upper circuit of 5%. Year to date, it's a 50% rally. This was a company which makes high-performance computing solutions, hardware and software. And they had come out with an IPO in July of last year with an issue price of 500 rupees. It had seen bumper subscription. So in day one itself, the stock had a premium of, I think, close to about 90-100%. And since then, it's been on a tear. So compared to its issue price of 500 rupees, we've seen the stock more than triple. Onto the Q4 numbers, revenue growth is 4.9% quarter on quarter. Year on year, the revenue growth is more than 115%. Margins have expanded, handsomely. On a quarter-on-quarter basis, margins are up 170 basis points to 15.2%. Year-on-year, margins are up 300 basis points. Profits, it's at an all-time quarterly high at 29.6 crore. And the contribution of AI systems is going up. So the company said this time, AI systems contribution is at 11% versus 7% in the prior year. And the order book, too, is very strong at more than 400 crore rupees, which means pretty good visibility going ahead. So Netweb Technologies is a stock on fire. And another one reacting well is India Mart. India Mart started off on a strong footing. So, the gap up opening 5% up. But now India Mart has added on to its gains of close to about 8.5%. Somewhere, I think it was just post our interview with the management that you've seen the share price of India Mart go up. And what is it that they said which got the street excited? One, India Mart has been struggling because the number of paid subscriber which they add on a quarter-on-quarter basis has been under pressure. In the current quarter, it was 2,600. In the prior quarter, it was about 1,850 on a quarter-on-quarter basis. Why were they struggling? Because they undertook a price hike last year. Now, because of that price hike, there was a lot of churn which took place. They lost some subscribers. It was difficult to add on. Some of the subscribers downgraded. So therefore, the number of paid subscribers was under pressure. Now the company said that the price hike that they undertook last year has been absorbed. They are taking measures to bring down the churn, and therefore they're confident that going ahead by Q2 of FY25, 6 months from now, they should go back to adding 5,000 to 6,000 paid subscribers on a quarter-on-quarter basis. And I think that was the key metric that the street was looking forward to, because for the last few quarters, they were unable to give that guidance on, getting back to 5,000-6,000 of paid subscribers quarter-on-quarter. But clearly the company sees, has that confidence to give us a timeline to that, and that's what the street has liked. But let's move on to commodities. Manisha is now joining in, and she's focusing on metals. Manisha.
Thank you for that, Rima. Well, yes, after a very stellar April, we've seen the month of May start slightly on the weaker side for many of these metals. So in the month of April, many of these metals saw gains anywhere between 12 to 18% on the higher side. We saw multi-year highs for almost all metals there. But for this month, the street is reacting to the strength in US dollar index. And this is after the US Fed meeting yesterday, which suggests that you wouldn't perhaps see interest rates in the month of June as well. And it could be pushed ahead up to September. Now, that really seems to be bothering. And we've seen some prices come off. In any case, on the charts, the prices had been running up without too much of a correction. So that's exactly what we are seeing right now as well. The other reports also suggest that China, which has been buying a lot of metals on the lower side, could actually be looking to export metals now, which are on the higher side. There are some targets also being put out on how China would be exporting refined copper as well, as the prices are trading at around $10,000 a ton. Is the case with various other metals also. The export numbers from China could be on the positive side here. When you look at the prices within this week itself, well, they have started to soften. The markets do believe that for traders, this is a good time to take in some profit. But for investors, it is still a long-term structural bull run that could just about continue, because we have seen the global manufacturing data kind of supportive. And then it also is about demand coming in from various aspects, starting right from EVs to AIs, where you could be looking at a thrust coming in, especially for infrastructure as well. And the metals prices in that sense would be in focus. But as I said, for the week, there is a bit of a profit taking that we are seeing across board.
Okay, got it. So it's across the board on metals. It's also on oil. Manisha, thank you very much. for the latest on the commodity markets. We'll take a break on that note, come back on the other side, and we'll put the spotlight on Fino Payments Bank. Rishi Gupta will join in from Fino to talk about the company's fourth quarter performance and the outlook for this year.
Welcome back. Let's get to the first corporate conversation on Trading Hour now. Fino Payments Bank is the stock on our radar. Good set of Q4 numbers. The total income expanding both on an annual and on a quarter-on-quarter basis. We have with us Rishi Gupta, MD and CEO of Fino Payments Bank, with us on the show. Rishi, thank you very much for joining in. Since the rollout of your CASA product in 2019, you have been making strong inroads into the retail liability. So if you could give us some numbers, what are the total deposit customers as of March 2023? What is the average cost of deposits that you are getting over there? And is there a guidance on CASA going ahead?
So, good morning. Total customers in CASA, we have 1.1 crore customers. We have added 32 lakh customers in 23-24. I'm happy to say that 40 lakh of those customers are digitally active. On a CASA revenue side, we have seen a 36% growth on year-on-year basis. This is now contributing to 23% of our overall revenue. Our renewable income, which is our annuity income, is now at 128 crores in this financial year. We have seen a 75% growth on that account as well. On liability side, we have seen a 49% average increase in our liability business in 24-23 as such. In quarter 4, we have seen a 40% growth on Y-on-Y basis. On an overall basis, we are at about 1,700 odd crores of deposits as of March 24. Our average customer balance has also gone up by 9% in this financial year. We expect to continue with the momentum on CASA. And we expect that the total number of customers will cross by another 30-35 lakhs in FY 24-25. And our average balances as well as liability business and transaction income related to CASA will improve as the number of customers and the balances go up.
So, and are you also maintaining that the total customer base will hit 2.8 crore by FY 28? I think that's the guidance you had shared earlier.
Yes, we're continuing with the same guidelines. Guidance on 35 to 40 lakh customers on an annual basis will keep on adding.
Okay. Can you give us an outlook on the debit card spends? How were they and what is the outlook on that for FY 25? What is it that you're seeing on the ground?
So when we look at debit card, we have to look at the total expenses which people are using through the banking ecosystem. Over and above the debit card, UPI has become one of the bigger spend platform which is being used by the customers. On a UPI side, we have seen an increase on average of about 11% last year. Our UPI transaction volume has grown by 175% on year-on-year basis. Debit card in particular has grown by 5%, but as you know, the ecosystem is moving from debit cards to UPI now, and UPI volumes are substantially going up in the entire ecosystem.
Okay. So, in terms of just the outlook for the year as a whole, I mean, FY 25, can you give us some sense on what's the kind of business growth that you would be aiming for?
Yeah, in quarter 4 or FY 24, we actually achieved 401 crores of top line, which was 24% on a year-on basis. We expect that the growth which we have seen in March and continuing in April, we should see a guidance of above 20% in FY 24-25. Over and above our traditional businesses of CASA and CMS, which has grown at substantially above around 30% plus in the last 2 years. And so we expect that digital business, which is now contributing to 9% of the overall revenue, will substantially improve in FY 24-25 and should reach about 12 to 15% of the overall revenue for us. Looking at the three big engines running on CASA, digital and CMS, we expect that the growth should be above 20% in FY 24-25. We're quite optimistic and positive with the trend which we are seeing in the last couple of months.
And Rishi, can you also throw some color on where all this growth is coming from? You're saying all engines will fire and you're confident of digital as well. But sort of which regions, geographies, where is the growth coming from?
So from a region point of view, we are nearly one third in north and east, around 20% in west and about 10 to 15% in south. We are seeing substantial growth coming up in south region for us because that is the region we started a couple of years back. And also on the east side, especially in the northeast and West Bengal, we are seeing growth coming as such. But on an overall basis also, there is a growth across the country, and specifically when I look at the central part of the country, we are seeing a robust growth continuing in our platform over the years.
Just a word on margins as well. Q4 EBITDA margins stand at around 13.5%. Is that a sustainable level? And what's the outlook looking at this year?
So just to correct you a bit on that, so EBITDA was at 26% and PAT was at 14%. And for the quarter 4, whereas for the full year, we are at 41% on EBITDA and 32% on PAT. We expect that the PAT percentage should go higher in FY24-25 because there were some expenses which we had to incur in quarter 4 because we are on a build phase as far as the digital business is concerned. So there is a high cost on digital and IT as such. Plus there was some settlement cost which had to be incurred as such. So overall basis, we expect that 24-25 we should see a higher revenue growth and a better EBITDA and a PAT number.
Rishi, thank you very much for joining in. Wish you all the very best. Need to get into a break. On the other side, we'll invite the management of Newen Software. They came out with numbers on Tuesday and the stock had skyrocketed to a more than 10% gain and it's seen follow-on buying. So the stock today also is up close to about 5%. This month, actually in 2 days, right? The stock is up close to about 24%. We'll get into a break. On the other side, we'll invite the management. Welcome back. Let's get to another corporate conversation going. The one we're talking about is Newen Software. As I said, they reported numbers on Tuesday. Very strong set of numbers. The company's revenues went up by 23% in Q4 on a year-on-year basis. The margins too have expanded for the company to 32.65%, driving a more than 100 crore jump in the company. 100 crore profit figure for Newen Software. If you could just get the numbers up for our viewers. Even for the full year, the company FY24 has reported a 28% top line growth. Margins for the company expanded by 140 basis points to 23.2%. Driving a 42% jump in the profitability. To talk about the way forward, we have with us the CEO of the company, Mr. Virender Jeet. Thank you very much for joining in. It's been another strong quarter for you and a strong end to the year with a 28% top line growth. How is FY25 shaping up for you and what can you guide in terms of a top line growth?
This has been a strong quarter on various fronts and our traditional markets, which is India and Middle East, has performed very well. And we have also had kind of a, not muted, but typically a higher single-digit growth both in APAC and US. Next year seems to be fine. We are still, our traditional markets are doing well. The funnel out there is quite strong. We don't see any reason why we'll have any kind of slowdown in India or in Middle East. On the same thing, we think APAC, we are very hopeful that next year is going to be even stronger than what we are there. US is still a work in progress, both for us as well as the market still has not really come out. And for us, banking, we are trying to pivot from smaller accounts to larger accounts, where there is still a challenge in terms of deal acquisition and speed has not picked up. So, but having said that, there's no reason why we can't maintain the growth trajectory we have. Whether we hit 24% or 27 or higher is going to be slightly difficult to predict as of now.
But is it at least safe to say that the company will continue to see about a 20% plus top line growth in FY25?
Yeah, there's no reason we should not hit that number.
Okay. So let's talk about margins. What is the outlook there? Will EBITDA margins continue to be around 23%? Because, I mean, in the past, you've said that you'd like to maintain margins around 23% and reinvest the excess to drive growth forward. So what's the thought process now?
See, as I previously said, this is a high gross margin business. Predominantly, we sell products and licenses where our gross margins annually are more than 66-68%. And we have a higher investment in both R&D, which is roughly around 9 to 10%, and on sales and marketing, roughly around 22%. Having said that, any growth which is above our, what you call a budgeted growth of say 24-25% does expand margin. But we think next year we should be growing at a good speed, and we will be able to maintain 23 or slightly improve it. On the net margin side, we should be very close to what we have done this year, because next year our taxation rates are going to be slightly higher than this year. So on the net margin, we should maintain a 20% margin. The business can generate more margins because as I said, that we do have licensed business as a large part of our business, but we do aggressively look at growth, especially both in markets which are very strong as well as mature markets.
Sure. Mr. Jeet, EMEA and Middle East, I mean, this whole region has seen very, very strong growth for you. What is leading to this? And can you sustain this kind of a growth rate of 30 to 40% at the top line level here?
Yeah, it's been a very good market for us, and the leadership we have in financial services, especially banking and insurance, we have carried that very well in banking in Middle East. And the markets out there, both in Middle East, Oman, Qatar, in terms of Saudi, these markets have really accepted our digital products or digital journey, where we are trying to build digital lending platforms or trade systems, have worked very well. Markets like Saudi, which have really expanded over the last 3-4 years, have a huge potential. And we have established a very early lead in the market, and we are trying to consolidate on that. I'm very hopeful that next year we should be able to sustain these kind of growth rates in that market.
Okay, able to sustain, the kind of growth rates we've seen in the Middle East market. Sir, you spoke about pivoting away from smaller deals to larger deals. What is the average size of the deal right now, and how has it changed in the last 1 year?
So I think on an annual basis, we have increased our revenue per account deal by 29%. So substantially the new deals which have come at a much larger size than our traditional new deals. On the US, we were focusing on banking tiers, which are typically less than $20 billion asset size banks. We have slightly moved away from that to focus on more up to $50 billion to $200 billion asset size banks, which is typically the pivot we are trying in US. But in other markets, we are already focusing on tier 1, tier 2 accounts. We have not gone to really tier 3, tier 4 accounts. Average deal sizes for us for any market in entry level can vary from $500K to $2 million. That is our entry point, but our account potentials can go up to $5 million, $6 million.
Okay, all right, got that. The US has been, work in progress, slow for perhaps a year now. What's your own assessment? Do you see a pickup anytime perhaps in the current year?
No, I think we on our own are not always waiting for the markets to require. So we generally focus on our own efforts. Being the size of the company we are not really connected to the market size globally in that manner. But as we had pivoted from smaller accounts to larger accounts, that transition is taking a bit more of time. We are hopeful that this year it is going to be a growth market for us, and it will really do much better than what it is in last year. We have already got early signs of wins. We have made inroads into larger banks out there. The funnel is looking very positive out there. The only issue in those markets, our ability to predict the deal closure cycles, and the cycle times are slightly longer, especially when the market scenario is slightly weak, the cycle times become even more elongated. And our partnerships with large tier 1 global system integrators, also since we are a part of a larger deal, their deal cycles are pretty larger, long compared to our traditional deal cycle. So prediction of closures is slightly poor, but overall pipeline is quite healthy out there.
Okay. So just getting to the big picture now, Virender. Today, Newgen is about a $180 million revenue run rate company. What's the 3 or 5 year plan? When does the company get to $500 million, and what's the strategy?
See, as a product company, we always believe that you will always get few years to really of a kind of a much more accelerated growth, and we are working on aggressive strategy, kind of a reset. I think we are in the middle of that phase right now. We have drawn an aspirational plan for ourselves, and of course our plans are linked to reaching $500 million and $1 billion out there. Internally in our design right now, though it's still work in progress, we do think we can accelerate that growth. Our internal commitments of delivering a higher growth are much more aggressive than the budgeted numbers or whatever target numbers. But unless we have a real visibility, kind of talking about those numbers may not be the right thing to do. It may give a wrong message. But internally, I think all the focus of the company is to build a $1 billion product company out of India in a horizontal space. And all our investments in terms of every return is all targeted for that. That's the only purpose of the whole leadership of Newgen, to really aggressively reach that goal.
Okay, just to, sum things up, what are the 3 pillars on which you get to $1 billion?
So absolutely. So I think we are very clear on that, how it works for us. I think one of the biggest pillars on that is to really go and operate in the markets which have higher potentials. So US and Europe have higher, the addressable market size is pretty large. So one is to make surely that we have a stronger inroad out there and have a more kind of a just share of our market share out there. The second is typically to consolidate on banking. We have really gone and expanded deep into banking. Our new products in digital lending, trade, supply chain finance are really finding strong traction. So we are increasing the depth and penetration of what we can do in each account. The third most important thing, we have doubled down on building insurance as a more stronger vertical. Right now it's around 7 to 10% of our revenue. We want to bring it all the way up to 25% of our revenue. So we are right now aggressively investing in building the insurance team, the leadership, the product alignment for that, and really helping building the sales and marketing engine to do the insurance. And the last one is the horizontal plan. Our products are generally applied across all industries. Currently, our GTM is localized to around 3 verticals, but with more partners, more system integrators, building their stacks on our platform, we think that we can go and make inroads in other verticals. These are broadly the 4 pillars, and they are at different stages of maturity, and every time in a few years you have to reset them. So, but we are very hopeful that within these 4 things, we should be able to achieve our goals.
Okay, and what is your internal target? You said the aspiration is to build a $1 billion product company out of India. When do you get there? Internally, do you have any targets? And initially to start with, make it to a $500 million company and then $1 billion company.
It's difficult. I think, our board would love to do it in the next 2-3 years, but I think it's not going to be that easy. We'll have, but surely the next step is from here. We can easily think at $180 million run rate as we put to take the $500 million target. We are trying to draw numbers and draw a path for that. And then once we are there, we should be able to draw $1 billion.
Okay, so, that's how it's playing out. Thank you very much, sir. Great talking to you and good getting perspective. On all the topics we've discussed. Before we let you go, just to finally sort of round it up, new logo additions were 51 in FY24, similar to 47 odd you added in FY23 and 53 in FY22. So are you going to stay around this range of 50s, or are you really planning to bump up this number in this year?
See, on the logo additions, we would surely love to have more logos. But I think what we have done is also, from compared to previous numbers, we are pivoting towards larger deals and slightly leaving out the smaller deals. So that is really, looked at absolute numbers, it does not make sense. But if you look at total booking from new logos, that's substantially gone up by 30-40%. So that is, having said that, we do believe that we have potential of going up to all the way up to 80 logos, at least, in coming years. So on the subscription side, it's a part of kind of a business model in which there's some amount of annuity which gets compounding every year with the sale of license or subscription. I think at a twice the size of the current company, we should be easily at 70-75% of subscription revenue or annuity revenue is what you call it. So I think both sale of licenses is converting slowly into subscription models. The ATS, which is the annuity level, is also increasing from accounts as we have more and more usage of the accounts. And the support model, which is typically a higher level of annuity, which gets built in the accounts, is also growing at a good, healthy speed. I think we should be easily able to target around 70% in coming 2 years.
Thank you very much for that. That is Newen Software for you. Confident about growth rates sustaining. India, Middle East continues to fire for the company. US is still work in progress, but they're hopeful things will turn around. Margins should sustain at 23%. Excess margins are typically reinvested back into the business to drive growth. And the company's aspiration is to be a $1 billion top-line product company coming out of India. That's Newen Software for you. And he also laid out the pillars on which the company will get there. Getting deeper into the underpenetrated markets, for instance, US and Europe, where their presence is much lower. Newen's bigger in India and Middle East, but now they want to crack the code in US and Europe. We'll get into a break on that note. We'll discuss market technicals with Vishal Malkan on the other side. Stay tuned.
Welcome back. You're with us on Trading Hour. Let's quickly move on and talk technicals now. We have Vishal Malkan joining in with an idea on the market setup today and how things are looking. Vishal, so what's the reading on the indices? Because the Bank Nifty kind of quietened out after that drama on Tuesday afternoon. The Nifty is chugging along. Any trade going on the index?
I think I would go with Nifty and Bank Nifty as being bullish, and they're in the new zone. Bank Nifty is already trading above the all-time high, so I think that's a very, very strong signal. But as far as trading is concerned, I'll go with stock-specific and sector-specific where there's more potential in terms of returns.
Okay. So what would your stock recommendations be?
So I'll go with a couple of stocks, which are like, first one would be Indus Tower, which is sustaining about that levels of 350. So I think there's a good potential. It's trading about the resistances and the momentum indicators are in bullish zone. So I'll go with a buy on that with a 345 stop loss for targets of 375 and 385 in the next few trading sessions. And the second one would be the Havells India, which has also broken out that 1650 resistance and it's trading above that. So I'll go with a buy on that with a stop of 1650 for targets of 1720 and 1750.
Okay. All right, Vishal, thanks very much for those quick trades. We do have to take a break right now. And as we do that, we have an announcement to share with you all. Our upcoming live personal finance webinar, CNBC-TV18 Accelerate, will feature none other than top market expert Nilesh Shah, MD of Kotak Mahindra AMC, who will answer all of your questions on managing your finances and also conducting a special masterclass on what not to do with your finances and the mistakes to avoid. CNBC-TV18 Accelerate Personal Finance Handbook with Sonia will also feature 3 well-known experts, and we'll dive into everything you need to know to master your finances and learn how to grow your wealth. Don't miss this chance to join us on the 11th of May. There are limited seats on offer. You can scan the QR code on your screens to register. Welcome back. Here with us on Trading Hour. Let's move to a big corporate development that happened over the midweek holiday. Godrej family has separated the groups amicably into 2 different factions. We have the Nadir and the Adi Godrej faction, and the rest of the family. Nisha is here with all the details. Nisha, explain it to us.
That's right. In a large corporate development in one of India's oldest conglomerates, well, the Godrej family has separated the group into 2 factions amicably. Now, GEG and GIG under Jamshed Godrej on one side and Adi and Nadir Godrej's family in another. Now, Jamshed Godrej will head the group with maximum value coming in from Godrej and Boyce, which, remember, owns the large Vikhroli land parcel. And Nadir Godrej will lead all the listed companies of the group. Firoz Shah Godrej will take over in 2026 from Nadir. Now, as per the family settlement agreement, a lot of critical details have been looked into, and the critical factors like land, brand, value, as well as also the overall structure have been the core areas which have been discussed over the 5 long years of negotiations. And it has been agreed that the brand rights will be with both the groups. And on Vikhroli land, Godrej and Boyce remains the owner and retains the MOU for development with Godrej Properties. Now, CNBC-TV18 has accessed some of the crucial details beyond the announcement. Sources suggest that's a $20 billion deal. That's the enterprise valuation of the family ownership. Now, sources suggest that there have been additions to the obligations on Godrej Properties regarding the land development rights, which needs to be seen in terms of the fine print for the actual impact on the company. On brands, while it's the family name used by both the factions, the logo differentiation will be something that will be actioned in a year's time, and sources suggest that Jamshed Godrej's group is going to action it and differentiate. Now, in order to really implement this entire massive transaction, the cross-holdings dealings between the families will have to be executed by a series of interstate transfer of shares in the listed companies, which we will see in a few months' time. Now, in one of the first actions after the family settlement agreement, Adi and Nadir Godrej have already launched an offer to acquire 26% additional stake in Aztec Life Sciences. So currently indirectly held by Godrej Industries in that particular faction. Now, key role was played, remember, by the four advisors, Uday Kotak, Cyril Shroff, Zia Modi as well as Nimesh Kampani, in really settling all the disputed matters and end this particular matter in a harmonious settlement. As a new era heralds in Godrej family, the two factions look forward to continue with their strong values as well as legacy created over a century with their own individual stamp on it after the separation.
Okay, thank you very much for that. But how does this impact all the listed stocks? To talk about the Godrej family ownership realignment impacting the individual stocks listed on the exchange, let's go across to Nimesh now. Nimesh.
Hi, Rima. So we identified three stocks which potentially can get impacted, and all the three stocks are under pressure today. I'll start with Godrej Industries first. That stock is down 8%, but largely I think on profit booking because the CD was anticipating the stock had moved pretty hard as well out of the announcement. So, but in terms of numbers and what it means for Godrej Industries, it's the holding company of Adi Godrej Group. So it holds all the listed stocks within the Godrej Group companies. It's still trading at a close to 55% discount. What I mean is the holding company discount. Now, in terms of individual holdings, Godrej Industries own close to 24% in GCPL, which is Godrej Consumer Products. They own close to 43% in Godrej Properties and own 65% in Godrej Agrovet. Now, the combined stake is worth close to 68,000 crores, whereas Godrej Industries' current market cap is close to 32,000 crores. So it's a holding company. So the next move would be quite interesting as to how they dismantle the holding structure within the Adi Godrej Group. So that's why Godrej Industries will be in focus. The second stock in focus is Aztec Life. That stock is marginally under pressure, but that's the only company within the Godrej Group where the open offer has been announced. So the Adi Godrej family group has announced an open offer to acquire 26% in Godrej in Aztec Life for a price of 1,069. Now the stock is already trading at 1,300 odd level, so which is why seeing some bit of pressure on that stock as well. But I guess that's largely because the other faction of the Godrej Group was not classified as promoters, and they were into the public category, and hence there is an open offer from the Godrej family group in Aztec Life. So that's the second name. The third stock, which is in focus and under pressure as well, is Godrej Properties. Now, in Godrej Properties, there is a clear indication now that the Vikhroli land, which is a huge land parcel, that will be owned by Godrej and Boyce, which is the other company, and Godrej Properties, the listed entity, will only be the developer for that particular property. Now, CLSA put out a note in the morning. They have a sell rating on the stock, largely on expensive valuations, but they believe that after this settlement, there is enough clarity that there will be no benefit of any Vikhroli land into Godrej Properties, and that's the reason why even Godrej Properties is down 6% in today's market.
Okay, all right. Got that image. Thanks very much. So those are, of course, all the Godrej Group stocks which are in focus. As we're winding down this edition of Trading Hour, the bank Nifty has started slipping again, and that's something to keep a watchful eye on. Remember, it was this part of the market that got really wobbly on Tuesday as well. Nifty is fine. No problems on the Nifty, but check out the bank Nifty. Kotak Mahindra Bank anyway was weak right from the start, but I'm checking the others. ICICI Bank is now down. So between these two, there's additional pressure that's building up. Let's just pull up HDFC Bank as well. HDFC Bank is still in the green, but losing some momentum. So yeah, those are the watch points. Axis also on the red side.
IndusInd Bank and ICICI Bank, where you are seeing the little bit of profits being taken off. But the Nifty Bank, which was flat at 11 o'clock, is now down 160 points. The Nifty and the Sensex are pretty much holding on to their gains. So at least that market, the benchmark, continues to remain steady. But out of time, then on Trading Hour, halftime report is up next.